not getting back into GE more recently? I mean, I'm sure that they've reached out to you. Everyone says, why doesn't Warren Buffett invest in GE and save it and take it to the promised land? It's this great American company.
Well, actually, I think Larry actually is doing a good job.
Larry Colton.
Larry Colton. But the Danaher is a good sale. And I think his priorities are straight, and I think he's a very able guy, and he's on the right track. And I'm a fan of GE's in the sense that we're a big buyer from them, we're a big seller to them. I've known the managers. Jack Welch is a very good friend of mine, and we don't agree on politics 100%, but we have a lot of fun together, and I love the guy. So I've got a great desire for GE to do well. It just hasn't looked that attractive to me.
Right. You talked about the groves of trees in the letters, shareholder. One was the third grove, which was sort of the in-between stakes.
The equity interests.
Yeah, is it the case that those are sort of not the healthiest grove of trees? And why would that be?
No, those are the Pilot Flying J's. They're companies that under GAAP accounting, we have to record under an equity method. We own more than 20%, but we don't control them. And so it's treated under GAAP accounting as a special category, and it didn't fit well in the other grove, so I had to make it a separate grove by itself. It's not that significant a grove.
You say that the sum of Berkshire has a greater valuation than the parts.
That is true.
Did you ever try to calculate that? How much is that?
Well, it depends on circumstances. I mean, there's sometimes when the float from insurance can be very valuable. There's sometimes when the ability to use production tax credits, we'll say, in the utility business, but have them on as part of our consolidated return helps. But that varies a lot. But it is a plus. We can move capital. Well, take a business like See's Candy, which we bought 40 odd years ago. It's a wonderful little business. It throws off capital. We've tried 50 different ways to expand geographically, do all kinds of things. It doesn't work. And we'll try it again and it won't work. But we can move that capital to help buy the NSF Railroad or do all kinds of other things. So we've got a seamless and tax efficient way of moving capital where it's needed. And we've got some companies that really chew up capital, and we got others that kick it off, and we can move it from one pot. If you try to do that with your investments, you incur some taxes as you go along doing it, and it's less efficient than what we've got.
You talked a lot about the tax cuts and the benefits to Berkshire. You didn't really get into the costs of the tax cut, which surprised me a little bit. Are there costs? I mean, is it just free money?
Well, it makes a difference. The tax cut we get, for example, our utilities, as I mentioned in the report, that goes to the customers. That's just the nature of utility regulation. But net, we were a significant beneficiary from the tax cut. I mean, basically, let's just say we had one class of stock, we got two, but stock, you and I own a business together, and we think we own all the stock, but the truth is, before the tax cut, the government had a 35% share of the stock on income. Now, it didn't have a share of the assets, but it had a share of the income. And if it wanted to change it to 40, it could have changed it, but fortunately it changed it to 21. And if we had a private business, if we had a McDonald's franchise together, or an auto dealership together, the third shareholder, that invisible shareholder, the government, just handed us back a bunch of the shares of stock, and our shareholders benefited, and a lot of other shareholders benefited.
Right, you talked about Ajit Jain and Greg Abel saying that Berkshire blood flows through their veins. Have they made a difference since they become vice chairs? And then are they like Warren and Charlie?
No, they don't have the interaction. They each run a separate business inside. Ajit does not think about the other businesses. He thinks about the insurance business, and Greg does not think about the insurance business at all. And I think about the money and the capital and so on. But they're running two very big businesses. I mean, Ajit's business, has, you get all told, at least a couple $100 billion of assets, and Greg's business has $150 billion of revenues. I mean, they both would fit up there toward the top 10, or so in the country in terms of value. So maybe the top 15. But they're very big businesses.
But they're not exactly like you two guys. It's
Oh,
not,
no.
Right.
Charlie and I have
That's
a partnership thinking
Yeah.
about the whole place,
Okay.
and we've done it forever, and we still do.
And Todd and Ted? I didn't see them mentioned.
Well, they have $13 billion each, including pension funds that our pension funds that they run, and so of the 173 billion we had at year end in equities, they had. Well, we had 173 bucks. We had another 8 billion in pension funds. So of the 180 or so, they had 26 between them that they're managing. And they got total discretion on that. They don't ask me. At the month end, I look and see what they did. They don't do much. They don't do a lot of trading or anything. But I look to see what changes they made. And Todd, for example, I mean, he made a couple of small investments in private placement type operations, and I know what the businesses do, but I can't tell you their names. That's his baby.
Was one of those, you made this investment in Oracle and then you sold it. Was that something they did? And
No, that was not something they did. That was something I did.
Yeah, and you said you didn't understand it. That's why you sold it. But then why'd you get it in the first place?
Yeah, well,
then?
that's a good question to which I do not have a good answer. I know. I see development. I know enough about the cloud to know I don't know enough about the cloud.
Right. Okay. So Barclays put out a note. They said they were lowering the estimates for Berkshire for the EPS. Do you read that stuff?
No. Well, I may read it accidentally, but I don't seek it out to read. I'll put it that way. But it just doesn't make any difference at all. I mean, if I spent time reading that, I wouldn't have the time to read 10Ks. And we're not going to do anything different. I don't know what we're going to earn. As I put in the annual report, and I really think this is unique. I mean, we do not prepare financial statements monthly for Berkshire. And there's just no other company would do it, but there's no sense doing it. I know where the money is, and I know how the companies are doing generally, but what difference does it make? Because I'm not going to try and hit any number for the quarter by, having a sale on insurance or doing something even worse. So and Charlie, I mean, he knows where we stand, and we know what businesses are doing well, which aren't, and we certainly know where the money is.
Another one, UBS survey of Berkshire investors says the 5 most important things to them are succession, investment performance, M&A opportunities, share repurchase, insurance margins. Do you read that, or does that
No,
surprise
but
you?
I don't disagree with that. I mean, I'm glad that somebody understands this.
Your own investors.
Yeah. Well, that's important. 54, well, if you go back to when I started my partnership in 1956 that Berkshire came out of, there were 7 people sitting there at a table having dinner, relatives primarily, and I said, here's the partnership agreement. It's done under Nebraska law. It's 4 or 5 pages. You don't need to read it. But I said, here's a little half-page, what I call the ground rules, and I want you to read these, and if you feel okay about that, about the interaction, what the expectations are, and all of that sort of thing, then we'll join forces. And if you don't, it's fine. Other people have, but we shouldn't be partners. I mean, if I'm going to have a partnership with somebody, I want it to be compatible. It is, and when you have a public company, you can't control who comes in. I can't control some guy that comes in and thinks we're going to pay big dividends or split the stock or something like that. So by my actions and my communications and everything, I want to attract the people that, from the public market, that I want, and I want to keep the others away. Costco was built. Saul Price, who started the Price Club, that thing, he sat down and figured out the customer he didn't want. And he set up a system that would keep away the customer he didn't want. Who did he not want? He didn't want somebody buying a quart of milk with somebody behind him with a basket of $200 worth of goods waiting for that. So he put in a membership fee, and by putting in a membership fee, he killed all the drop-in business, the business that belonged to the 7-Eleven. We want Berkshire to keep out people who have expectations about us that are different than ours. I mean, good for them, and I hope they find somebody they fit. But if you're going to run a church, you want your seats to be filled by people that are generally want to listen to your form of religion. And you don't want it to change every week and say, gee, I need a new group and I'll go out and talk to a bunch of investors and get them to come to my church this Sunday. Because there's only so many seats in the church. There's 1,645,000 or so A equivalent shares, and those are the seats. And I want them occupied by people that are on the same page I am.
The Church of Berkshire. Seems like you've got a big weighting in financials, and of course you finally invested in Jamie Dimon's company. Why banks right now?
They're businesses I understand, and I like the price at which they're selling relative to their future prospects. I think 10 years from now that they'll be worth more money, and I feel there's a very high probability I'm right. And I don't think they will turn out to be the best investments at all of the whole panoply of things you could do, but I'm pretty sure that they won't disappoint me.
Is climate change changing your insurance businesses?
No, it doesn't change the insurance business.
Does it change modeling or something in the business?
No, it would change our insurance business if you were writing 20-year policies. I mean, if there was something that changed life mortality adversely to the interests of a life insurance company, you're stuck with a policy for 20 years if you write the life insurance policy, and you'll keep paying your premiums if it's adverse to me. That's what's happened in long-term care insurance, for example. But when you write a policy for 1 year at a time, you see what the developments are, and if cars, for example, are much safer to drive than they used to be. There used to be 15 deaths per 100 million miles driven. Now there's a little over 1. On the other hand, they've become much more expensive to fix. I mean, that little side view mirror, which used to cost $10, now $1,000 or something like that. So you have things that are changing in terms of, if you're writing collision insurance, you got to allow for the fact that windshield, the bumper, all kinds of things, or the side view mirror and all that are way more expensive. But if you're writing liability, you know that people aren't going to die as often. So climate change is climate's been changing. But the truth is that you now can buy really big catastrophe limits cheaper than you could buy them in 2005 or thereabouts, allowing for changes in the dollar and concentration of population. So far rates have come down. That's the reason we've gotten out of the cat business to a great degree. We were a very big writer of cat business 10 or 12 years ago. We aren't out of the cat business because of climate change. We're out because the prices aren't right. And the world will change, and that's got very serious consequences, but it won't change that much from year to year. That, we've done very well during a period of some climate change.
You've talked about technology advancing faster than our ability to understand it. And I'm wondering if social media and Facebook and Google and Russian trolls coming in, and is that maybe an example of that? Or are you still worried about that problem?
Well, I think cyber poses real risks to humanity, forgetting about the problem of even misinformation. I'm just thinking of, we have railroads running over 22,000 miles of track, and some of them are carrying ammonia, and some of them are carrying, chlorine and things. We have to carry them. We have no choice about that. We're required by law to carry them. And I would rather do that in a non-cyber world than a cyber world. And there are all kinds of things. The problem about something like cyber is that it's moving, and it's just unpredictable whether you'll get some crazy guy like stuck the anthrax in the, what they can do becomes magnified. I mean, when you saw what 19 guys did, on 9/11. I mean, tools in the hands, or potentially in the hands, of either crazy individuals, crazy groups, or even a few crazy governments, are really something. And we don't necessarily know what all the tools they have are, and that is moving all the time. I mean, again, Einstein said, he said, "I know not with what weapons World War III will be fought, but World War IV will be fought with sticks and stones." I mean, it's a dangerous world.
I don't know if you've been following this, Warren, but what do you think of Elon Musk's behavior as a CEO?
Well, I think it has room for improvement. Now, he and he would say the same thing. I mean, it's just some people have a talent for interesting quotes, and others have a little bit more of a blocker up there that says this can get me in a problem. But he's a remarkable guy. But I just don't see the necessity to communicate. I think I've got 7 tweets because a friend of mine signed me up for it, and she's called me about 100 times saying, can I tweet this or that? And I've said yes to her 7 times, I guess, or something like that. I've never actually written one myself. I don't even know how to do it.
Have you talked to Elon ever?
He joined the Giving Pledge, so once or twice, but that's a lot of years ago. 7 or 8 years ago. He hasn't come to our annual gathering, so I haven't seen him for 7 or 8 years.
So let's talk about this trade war that's been going on a little bit with China. And I guess I'd like to ask you, do you think that Donald Trump was right in calling out the Chinese government and basically putting them on notice?
I won't have any comment on that. In terms of political activity, I don't put my citizenship in a blind trust. So when the election comes around, I'll do something. On the other hand, people will interpret things I say about any president, as to some extent coming from Berkshire, and they don't come from Berkshire. I'm just an individual, so I think I'm glad to talk about China, but I can't talk to you about that part of it.
Fair enough. I mean, do you think there was room for improvement then in terms of the trade relationship between China and the United States?
Well, I think that China and the United States absolutely are destined to be the superpowers, beyond my great-grandchildren lives, and will always be competitors, and will be competitors in business, will be competitors in ideas, all kinds of ways. And there's no other way it would be. And we just have to make sure that competition doesn't get us to a point where we don't realize that the best world is one in which both the United States and China prosper. I mean, we do not want to have an island of prosperity in the rest of the world, envious of us in a nuclear age. And China doesn't, Russia doesn't. I mean, we all recognize the dangers of letting competition get out of control and become, you can be competitors without being enemies. And that's what all powerful nations have to realize over time. I mean, it's different than 200 years ago when you could have some dominant country, and then they may have done some things that you didn't like, but it didn't threaten the existence of the world. You really threaten the existence of the world as we know it if important countries do not constantly recognize that they can compete, they can fight over certain things, but they can't regard it as essentially the equivalent of war.
Here's a question from Kevin Chen, who is a Berkshire shareholder and an NYU professor. And he says, and this is sort of along the lines of what you were just saying, Warren, but do you think that U.S. and China will be able to resolve their differences, or are conflicts unavoidable?
Well, I don't think conflicts are unavoidable, but I think it has to be active thinking on the part of every hugely powerful country. And Russia is hugely powerful. I mean, 90% of the nuclear arms in the world are between U.S. and Russia. So they have to recognize that the best world for them is one where they don't try and grab all the apples, basically. And we have to recognize that. And we can't, in the United States, we can't think that either our ideas run the world, or we start getting aggressive about things, and China can't think that, and Russia can't think that. And that's obvious. You just have to make things, you got to be sure things don't escalate. Have World War I, with an archduke. I mean, you get you can get chance incidents, and you really want to. I asked one of the presidents one time, in terms of what he would do if he awakened in the middle of the night with somebody coming to him and saying, absolutely, somebody else has launched, and would you launch on that? And you've got 10 minutes to decide. And I wouldn't want to have that responsibility, but you want to make sure you don't get to that point.
Right, right. Would you ever make a big acquisition in China? And if not, aren't you missing a huge portion of
the answer is we would. Yeah, we would.
Have you looked?
We've been made aware of some things, yeah.
Are you concerned, on the flip side of the coin, are you concerned that the rule of law is different, that the accounting might be opaque?
Well, I'd want to be sure I understood the accounting, obviously. Some businesses that'd be easier to do than others. But I know the laws, the customs, the accounting, the people better in the United States than any place else. So there's some small hurdle in many countries to get over, which I can get over. I mean, but I just don't. It's just not as easy as looking at something where I already know the answer, from previous transactions or something of the sort. So it's easier to make a big acquisition in the United States. I have to do more work if I'm looking beyond the borders. But I love the idea of doing it. When we made the acquisition in Israel a dozen years ago, I didn't know what the tax rates were there. I didn't know what corporate law. I suspected that it would all be answered satisfactorily, which it was, but I didn't just automatically know it.
It seems like you're more open about doing a deal in China than in previous conversations.
I don't think so. No,
it's out there.
I'm open. Yeah,
Right.
we made 2 decent-sized stock acquisitions there, and they worked out fine.
Those are?
Well, PetroChina and BYD.
BYD, yes.
Yeah, BYD was Charlie's, but
Right.
Charlie's
Yeah.
very well versed on China.
Right.
But,
The U.S. trade deficit has been widening, and of course a lot of that has to do with our trade with China. Is that something that worries you?
well, I wrote an article about it for Fortune and the trade situation many years ago, and when our deficit got to be large in relation to GDP. I don't think it's essential to have a trade balance, but I think that a trade deficit gets large and it looks like you have no way out from it, that can be a real problem over time. I mean, you're shipping little pieces of paper to the rest of the world, and they're shipping you goods. I mean, people are working, making underwear or shoes someplace, and they get little pieces of paper from us. And it gets very tempting if you've done that enough to make sure that those little pieces of paper aren't worth very much over time when they want to cash them for something. So you don't want to have, we don't have any problem running trade deficits, but if we ran really large ones and we sort of worked ourselves into a box where we didn't really have a solution to get the numbers down, it could be a problem. And I wrote about it one time, but it's kind of a nice thing, actually. I mean, wouldn't you like to have something where you just send out little pieces of paper and somebody keep supplying you with your food or your, whatever.
I'm living it.
Right? Yeah, right, exactly. Yeah, we call them credit cards in the United States.
Exactly, yes. Okay, and last question. China's facing its slowest growth in nearly 3 decades. The leadership there lowered the targets, I think, to around 6.5%, 6%. Are you concerned about this slowing growth and the impact on global markets?
Well, I don't worry about it in terms of global markets. I mean, China's going to grow a lot over time. I mean, when you think of what's happened, well, this is 1949 or whatever, but there's been nothing really like it. I mean, you had 20% of the world's population at that time, perhaps, and it really hadn't remotely achieve their potential. I mean, they had the intellectual capacity, they had a decent soil, all kinds of things. I mean, and what's happened there almost is beyond belief. And that game's not over, but we've had incredible developments in the United States. I mean, real GDP per capita is 6 times what it was the day I was born in the United States. 6 times. And we thought we were a pretty developed country then and everything. No, my parents wouldn't have believed it. I mean, they would have thought, that this kid has really got it made. Make more in the United States, and it was true. I mean, we had this tailwind, and China's had a hurricane behind it, in recent decades.
In a good way.
Absolutely.
Because you were comparing it to the tailwind of the hurricane at your back.
At their back, and they have found a way of life that is dramatically different than existed for the billion. There was a billion then, maybe a billion, 2 or 3, whatever it is now, and they have changed a country really of size. I don't think there's ever been anything like it. We've done it too, but it took somewhat longer. I mean, it was more stretched out. It was a remarkable period, but when you go to, I first went there in 1995.